So you're having to tackle two things there. Become familiar with the balance sheet and income statement and just what is it, and how it's built and constructed, and then also having to do analysis with it. Now the analysis part is not that difficult. If you remember correctly, it's one formula and you follow it all the way down, right? Okay, and depending upon horizontal or vertical, that determines what we use as what we call our base figure. Remember that? Or our base year. Okay, so keep those things in mind. On this first problem, you should have 8 problems. 8. On this first problem, this is what you're given, and this is what you have to provide. Now, everywhere you see a blank, including the drop-down boxes, you have to provide an answer. So let's take a look at one of those. Let's take a look at the cash, or this one right here, and just take and see what it looks like.
This almost looks like when we did the check.
Banking. Yeah. It's the same kind of setup.
Mm-hmm.
So what this is testing is, do you know what assets are? Do you know what current assets are? Do you know what current liabilities are? Do you know what long-term liabilities are? Because if you don't, then you might not pick the correct choice. Now, as far as for current assets, could anything else here be correct but cash? And I know some of you just got introduced to accounting. What else can be? That's long-term or fixed.
The prepaid insurance? Oh, no.
It's not up there.
Sorry.
Payable.
Payable.
If it isn't payable, it is a liability. If it is the word prepaid, it is an asset.
Prepaid.
So, unfortunately, yeah, I kind of feel sorry for you because if you're just looking at accounting, you're having to deal with classifying accounts, knowing where they belong, know what the definition is, so if anything makes the chapter somewhat difficult, it might be that, just the knowledge of basic accounting. The calculation part is not hard.
Mm-hmm.
Those formulas. So, as you can see, there's only one possible correct answer here in this drop down. Now, you have 4 more, right, or 3 more there. And one thing I will tell you is that if you pull down one of these menus and there's more than one possible correct answer, you can choose either one. That's the rule to go by, okay? As long as you get the right numbers in here, it doesn't matter. It doesn't always matter which order they're in. Now, usually, just like in the banking chapter, remember? Usually, in most cases, I would think that there's one correct answer. But under income statement, and under expenses for that one, you'll have more than one correct answer, as you will see when we get to it. More than one possible answer. Okay, so you really have to know your stuff here. Now, if you take a look at how this is set up. Let's start at the top. From the following, prepare a classified balance sheet. And what they give you here is all the stuff that you have to plug in here, right? And you have to do a little bit of addition and subtraction. So anyway, it always goes in this order. Assets, actually current assets, and then what? What comes next? Long-term assets, and then over here, short-term or current liabilities, and then long-term liabilities, and then owner's equity, which we call capital. So what I'm trying to do is make it easier for you. You can see that this order here follows the same order, basically the same thing here.
Now, make sure you, in the question, the last sentence.
Yeah, right here. Okay. So merchandise inventory was $4,000 for the year. Yeah, let's get into that. So they do not list merchandise inventory here. It is a current asset. It is a current asset. So why they didn't just put it on the balance sheet, I don't know. It goes on the balance sheet. So if you can imagine that here, right here, Okay, so they basically follow that order. Cash, $6,000. Inventory, It's up at the top instead in the writing. 4,000 is the balance in that account. And then anything that begins with prepaid is an asset, right? We have rent and insurance. Plug those in. Those are all of our current assets. The ones that we expect to turn to cash within 1 year's time, right? Anything else that we use in the office, such as equipment, machinery, land, buildings, those are fixed assets, or we can call them plant and equipment, either way. You only have one account there, right? Office equipment. Back up 1 second, just back up a step here. What do we do after we got all the current assets? Total current assets. Now you always come to the right. So when you see this blank here on the right, that's what this is for the addition of these. You only have one account here for fixed assets, which is 5,000. Now you're going to do what? Add current and fixed, and you get total. So what do we say about that equation last week? What is that equation?
Assets equal liabilities plus owner's equity.
Good. Assets equals liabilities plus owner's equity. So the balance in assets has to be equal to, total assets has to be equal to total liabilities plus owner's equity. And again, I'll mention it again, anytime you see the word capital, consider that in this class as synonymous or the same thing as owner's equity. It is the balance in owner's equity. And we won't take it any further in here, okay? All right, so we got this side. Over here, look how it goes in order. Accounts payable, the balance is 1,800. Anything that isn't payable is a liability account. Liability account. If it isn't payable. Notes payable. Now it even tells you on the side here, it even gives you a hint. It's long term, which means it takes more than 1 year to pay off, right? And there it is here, 8,000. What do we do here for this blank? We add in our current liabilities. Over here we have long-term liabilities, just one account. We add both of these to get total liabilities. And then we just simply write the end. You know you have to choose capital, you know that. And it's going to be $9,200. And it's mentioned right here also. It's the last account. There's the balance. So we add 9,200 to the total liabilities, right? Owner's equity plus liabilities, 20,600. And you have the same exact number on both sides. It's in balance. Any questions on that one? Ready for another one?
There's only 8 problems.
There's just 8, but they're involved.
Yeah.
For the most part. I mean, it's a lot of calculations. Took a little bit of mercy on them. Not the online class though. They get 15 to 20 every time. Wow. So I got to keep them busy. They don't come to class.
After that, they probably were some.
They get all the hard problems, the tricky ones. And it's amazing because I don't think I've had more than 1 or 2 questions from that class all semester. And I don't see them in class, just emails, you know, there was like 1 or 2 and that's it. I'm surprised, I'm really surprised. So, anyway.
Oh, the grades.
They have a 95% average of the class. That's with no lecture. Okay,
That's for the brain.
maybe the lecture is screwing things up.
Oh,
No, okay, all right, hold on here. Because we can't get everything on. I'm just trying to see what's left again. It's okay. Like this. All right. What is the key word there at the top in the directions? Horizontal analysis. So, which way should you be thinking?
across.
Horizontal, not vertically. Okay, so we're looking this way. And you can always tell because you usually have 2 years right next to each other. And you imagine wood right here all the way down.
A minus
A
sign.
minus sign, there you go, that's half the problem. So the current year minus the past year gives you the amount of increase or decrease, right? And then you take that and divide by what? Always the lowest or the past year, not the current. And you can see that 4950 should be 44.59% of 11,100. Check it if you'd like. It should be close enough. And you follow that format all the way down.
Can I make a couple suggestions?
Yeah.
On the increase, decrease, do that first.
Well, you have to.
Yeah, no, I mean, do all.
Oh, you mean all of them?
Do all of it first, and
And then do your,
Because then
Okay.
if that's right, then when you're doing your division.
then you got it right.
Okay. Yeah, that makes sense.
And then, the other thing is watch your rounding.
Yeah.
If you're 1 penny off, it will reject.
So round to the hundredths place. It's money, hundredths place. You might notice we have a couple of negative answers here. Here's the first one. Why is that? Because we're taking a larger number from a smaller number. So we actually had a decrease right here in inventory, comparing 1 year to the next. So that means that your answer for the percent increase or decrease will also be negative because of our sign rules, right? Anytime you divide or multiply by unlike signs, you have a negative answer. It has nothing to do with positive or negative. It's if you multiply or divide by unlike signs. If you multiply or divide by like signs, you have a
Like answer.
positive answer. So you could divide two negatives, and some people will think, well, the answer has to be negative. No, it's positive. It was kind of weird for me the first time I heard it many years ago. Okay, so any questions on this one? It goes down a little bit further.
But we never have to total top to bottom, correct? When you're doing the horizontal one.
No,
Okay,
you're thinking of the 100% thing.
yeah.
Yeah.
Okay.
So copying all these numbers down is not going to do you any good if you don't know how to do the formula. Minus sign here. That
And
gives
then
you your answer
divide your
here.
amount.
And then divide your amount by the earliest year. Any questions on this one? Probably all of them. I hate to say all.
That's what it looks like to me.
But if that's what we did last time, that's correct.
Yeah, so that first number.
Your base year is usually the earliest year,
Yeah.
just like in the trend analysis, it's the earliest year.
Well, I noticed even when you have like negatives, you want to do like letters here, and ours just seems to be.
It should be, yeah.
For all of them, it just seems like it's the letters here like that.
You're looking to see if your accounts are rising or falling
Yeah.
between 1 year and the next, and then what percent did they rise or fall. And then with that, we make decisions, but that's beyond the scope of our class. Okay, are you ready for the next one? Yes, you are. Okay. Okay, I'm just looking down at the explanation, I'll come back to that in a minute. But here's the whole problem. And now we have, not a balance sheet, but an income statement. So we're shifting gears here, it's an income statement, which contains what? Revenues and expenses, right? Now notice here, very important, they give you this for a reason. Beginning inventory, merchandise inventory at the beginning of the month, the first day of the month, was $1,252. On the 31st of the month, the ending inventory was $1,620. At the bottom of the explanation, they show you how to do it, but we harped on those formulas, remember? The four that you used to build the income statement, we talked about them a lot last time we were here. Who remembers what they are? First one is what? Without looking.
Beginning income tax and
Balance percent.
On the interest rate?
Say again?
Gross profit equals sales minus cost of merchandise.
That's one of them, yeah. What's the first one?
Net equals gross minus sales return minus sales discount.
Okay, so the first thing you have to figure out is net sales.
net sales equals cost of goods
See
sold
net sales?
equals gross profit.
So you have to know these formulas. You're going to use these for. That's why we spend so much time on it for this. So net sales. How do we get net sales? She just said it back there.
Gross minus sales returns minus.
Gross sales minus sales returns minus sales discounts equals net sales. Think about it. You own a business. You sell merchandise. Customers bring stuff back to you. You might give them discounts. So that's money that you are not receiving.
Yes.
That's why we subtract it out. What? All right. So net sales is the first formula. And here are the things you need to do to calculate it. And again, sales minus sales returns minus sales discounts. That's how we got this number. And the second formula is cost of goods sold, right? Now remember, that's the trickiest one.
Yeah.
For most people. Okay? So how do we get cost of goods sold? Beginning inventory
Net
Plus
net
purchases
purchases,
minus
net purchases,
purchase
net
returns,
purchases,
minus returns.
returns
and
minus
discount.
ending
minus
inventory.
purchase returns.
Minus
Well, that's
ending
in net purchases, isn't
Yeah.
it? Okay, let's back up a
It's
minute.
in the parentheses.
So beginning inventory plus,
Purchases
Minus
minus-
return
couldn't we
discount.
just say net purchases?
Yeah.
Is that how it shows it? Yeah. Now, net purchases is a separate formula. It's embedded in that formula,
Yeah.
remember? Let's go through it on here. Here's cost of goods sold. How do we get this number? This is how we got it. Beginning inventory was $1252. We purchased, so we're going to add to 1252, $10,712. With me so far? I've added this number and this number. And we got purchase discounts from our
So you
suppliers.
minus that.
We subtract the 544 because we don't have to pay that. Okay, are we there yet? Not quite.
No.
We do what?
Subtract.
Subtract ending inventory.
And
There's the
then-
whole thing.
And then you got your cost of goods sold.
Then you have your cost of goods sold. I used to fight with that years ago.
Still sounds funny when you say it.
Sold,
Yes.
sold.
It does sound like you're
So
saying
did they use
soul.
purchase
It sounds like you're
returns
saying
to,
souls.
Yeah.
It's so funny.
Well, you know what I mean.
I do.
It's
did
not gonna
they
change.
use
I don't-
purchase returns too, or just purchase discounts?
Both.
Because I have minus purchase discounts or purchase returns.
Yes. If
And
if
then
they
you
have, if they're up
Minus
here.
ending inventory.
If they're up here.
Okay.
Huh?
That's right.
So we lost.
You could just have it worded a little bit.
Yeah, that's all,
Have it
yeah.
worded up there.
I used to have to deal with
Okay.
what you have up here.
Go over that again, real quick, please.
Okay, sure. Always a pleasure.
Sure.
Cost of goods sold, 9,800. How do we get that number? We took beginning inventory, 1252. We added to that number purchases that we made, and this is inventory purchases.
Mhm.
Then we subtract purchase discounts,
And then we subtracted ending inventory.
and then we subtract ending inventory. And you should get that number. Any more questions? We're not done yet with this one. We're just
So
here.
the 10,712 minus the 544 would be in parentheses. You would do that first.
First, you would add 1252 to
Yeah.
10,712.
It doesn't matter, I mean, you can take
It-
that.
It doesn't matter where you can put them in any order.
Yeah.
Because of that mathematical property, right? We can, if we're adding and subtracting, it doesn't matter which order we do them in, as long as you have the signs right, the positives and negatives. Does that make sense? So the order doesn't really matter, as long as you
Because
know
we're
where
not
to go.
multiplying.
Well, if we're multiplying, the same thing applies too. You can be multiplying four numbers, it doesn't matter what order you put them in. Just like addition. Just like with addition and subtraction. It doesn't work for division, though, does it? Okay. So you can see the next account and the several accounts here in expense. They end in the word expense. So these are all expense accounts. The hardest part is through. We're done with the hardest part. Before we move on to the expenses, we have to get the third formula, and that is gross profit. Okay, how do we get gross profit? We took cost of goods sold and subtracted it from
Operating
sales.
total expense.
Net sales minus cost of goods sold equals gross profit. Right off that PowerPoint.
Minus cost of goods sold. Equals
Okay.
gross profit. Gotcha.
We're almost done with this one. So we have gross profit. There's one more formula, right? There's four of them. Net income, right? So we're almost there. Operating expenses, we list them all, and they're right here for you. Do you see that they're in the same exact order here? Now, what you might see is when you pull down the you bring the drop-down menu, there should be a situation where you could choose more than one. It doesn't matter what order you put them in.
Because they're all gonna total the same.
They're going to all total the same. Now,
So
it might
this
be
one-
easier just to put them in this
Yeah, in
order.
order, yeah. This
That way you
one,
don't miss anything.
to get net income, you do gross profit minus operating total expenses equals net income.
Right. So we
Gotcha.
total up all the expenses here. Here's the total of this number. And then we subtract total expenses from gross profit. And we get net income, which is your profit, bottom line. What if your expenses are greater than your net income or than your gross
Then
profit?
it's a minus, it's a negative.
Then it's a negative. In parentheses or negative sign or red. Oh, hold on, one at a time. Okay,
I'll explain it.
okay. You have a question for me? She's looking at me.
It's just so gross, how you find gross profit and this stuff.
Gross profit? Okay, here's gross profit. Very
Minus-
simple. Net sales minus cost of goods sold.
When you submit your answer, it would accept either or, but there was sign or parentheses.
No. Negative sum. Always in this class, don't ever use, for any of the quizzes, don't use parentheses. Always negative sum. Okay. You could try that. I've never tried it. I'm assuming it's not going to work.
I
This-
used it today and it worked.
It did work?
Yeah.
Maybe it will. So, if it doesn't work, then what does that tell you? You know, use the negative sign. Okay. So, again, gross profit minus total expenses, net income. Don't forget this second sentence, very important. Because this will screw you up here. If you get screwed up here, you get screwed up everywhere else. It's a fun game.
So, to get net sales, you do gross sales minus sales returns and sales discounts equals net
Yes.
sales.
That's right.
Did you have your PowerPoint for that?
I didn't do it.
Oh.
I ran out.
It's right here.
Yay. I think it was just another problem with the last one. Okay, so here we go. Now,
Yeah.
this is, it says consolidate statements of operation, but we can tell by looking at the account names, what is this? It's either a balance sheet or an income statement.
balance sheet.
Oh,
Sorry. I forgot to use it.
I am so disappointed. Thank you.
Income
We had a
statement.
50-50 shot.
What
You
number is this?
What's on the balance
All
sheet?
over it.
Assets, liabilities, and owner's equity. Income statement, revenues, and expenses.
Well, it looks like the last, no.
Okay.
You said the last question was a vertical.
It was an income statement, the last one. We created an income statement. Now we're going to take 2 quarters. Okay, turn that damn thing off. Thank you. All right, vertical analysis. You always get 1 strike, and that's free.
Sorry. There, it's all right.
Thanks. Vertical analysis of an income statement. All right, we're looking at 2 quarters in 2011 and 2012. It's the second quarter, which is the second 3 months, right, in each year. And we're comparing them to see how we did and how we performed. Okay, and it says vertical, so we're looking which way?
Down.
This way. Now who remembers, what is your base figure in every calculation that you're going to use over and
The one at the
over?
bottom.
For the
The one at the
balance
bottom.
sheet, it's the one at the bottom.
I got it. The one at the bottom.
No, that's for the balance sheet.
Oh!
Income statement.
It's vertical.
Oh,
Right, man.
it's
You're,
the one.
you're answering a totally different question. Hold on.
Seriously, Chris, I can't talk.
Okay, take a look. Follow me. Let's just start over like from scratch, like we never talked about it. Okay, what a waste of breath.
Sorry.
Net sales is your base figure. So what you're going to do is cost of sales
Divided into that.
divided by net sales. And that's how we got 56.19%. So again, you do this all the way down. Cost of sales divided by net sales, 56.19. What about gross margin? And you
Divided
don't have to
by net
understand
sales.
some of this language. Divided by net sales,
Equals 43.
43.81. Does it sound familiar now?
Yes.
Yeah, for that.
And I did it. I got confused. I was,
Oh, I
it's a
didn't notice
vertical
that.
income sheet, and I was comparing it to the balance sheet, and that's what I did.
I didn't notice that. But if you notice the 100 here,
Yeah.
that is because 7298 divided by 7298 is 100.
That's where you get your 100%.
So you just go all the way down. You just go all the way down in that fashion. I don't know what else to say about this problem. That's all there is to it.
Yeah, I just got confused because
So the answer's only from the 2012?
That's a good question. And they gave us 2011,
Yeah, they
and it's
did.
not even necessary. That's a good point. Okay, well, the reason they did is because it's common to use a comparative income statement to show how quarters or how years compare. And that's why it's up here. They could have left it off. So we don't need it. Notice I didn't point to it yet. That's because we're doing a vertical analysis. It's not a horizontal, it's a vertical. So that was on purpose to
But I
test
was-
your,
right, on the balance sheet, you use the bottom measure.
it depends, yes. The
I
balance
just got
sheet-
confused.
You had your hand up earlier? Yes. You forgot? Okay. It was up, yeah, maybe it was a stretch, I don't know. Okay, any questions about this one? That is number
5, I think.
5.
Sweet, we're almost done.
Okay, let's see, we have, whoa.
That's a big.
Okay. Don't get too scared to do it. Yes.
Yes.
Yes, it is. Yeah, that's fine. That's fine. Just like, that's fine.
Vertical analysis mixed with a.
I'll figure it out. One.
Like number one. Number one.
Let's do it one at a time. Okay. So it's like 2 problems in one.
This is number 6.
Don't feel bad, you could have had 15 of these.
Yeah.
So just imagine, just like the online
Thank
class.
you. Thank you, trust me.
I did trim it down somewhat, okay, as long as you're getting the message. I don't have to overload you. So, if we have 2 years here, and you can already see that this 4,100, your first answer, is the result of what? 19,400 minus 15,300. The reason I'm mentioning this is because in the instructions, they don't tell you what. They don't tell you to use horizontal or vertical, right? You have to figure it out for number 6. What's number 6? So here's a minus sign all the way down.
Horizontal.
Horizontal, minus right here. And that's how we get all these answers. And then we take what? For instance, the first one, 4,100,
Divided by 50.
divided by the earliest year, and we get 26.8%. And you do this all the way down until you get here. So take a look at that for a second, and then we'll scroll down and take a look at the rest.
So you have to round the answers.
Usually you have to round, yeah, to the second place. What is this, week 8? Wow, we're more than halfway through. Can't believe it.
Did you find out when spring break was?
No, I did not. Does somebody know?
It's 26.
Last week of March.
Till when?
It's the
Last full week
26th.
Is that a
and 30th.
Monday?
Yes.
26th through the 30th, so it's just like 4 days, spring break?
Well, no, there's 2 weekends connected to there,
It's 5 days.
connected to those days.
It's the
There's
full
two.
last week of March. 26th to the 30th?
Yes.
Okay, I thought it was the week before.
No, it's the last week.
And we turn our clocks ahead this Sunday, second
So
Sunday in
last
March.
week, okay.
Oh, really?
Turn your clocks ahead 1 hour, spring forward.
More sunlight?
I wish they wouldn't have passed that law, I wish they would have changed it last year, 'cause it was up for legislation.
That's number 6.
Okay, any questions about this part?
Mm-mm.
Okay. Supposed to be in school this summer. Okay,
So now you take the 12,300 and divide it into the 9,800.
that is correct. So pay close attention.
Say that again?
This is a vertical analysis of a balance sheet. We're on the same problem, all right? It's 2 problems in 1. Now what you're going to do is deal with column 1. They want you to do 2 years worth. Don't be confused by this. This was created like this on purpose, not by me, but I can tell. I know the way these writers think. They put this here to see if they can get you thinking, you know, to go this way with your calculations. You're not. You're going this way for both of them. All it is comparing 2 years. Exactly. So
So we're dividing that by that and we get that.
now your base figure. Now don't look anywhere below this line yet. All we're dealing with is assets, and the base is total assets.
9,800.
So you're going to take every account balance, cash, first one, and divide it by 98,800, and that's how you get this answer. What about the second one? 16,800,
Divided by 9,000.
9,800. Do that all the way down.
The 2012 though, you did the 9,300, you divide it by the 67.
Yes, same way, right. And the beauty of it is that when you get to liabilities and owner's equity, you do what?
The same thing.
Is it exactly the same
No.
thing? Be careful.
Well, you divide 13,300 by 9,000.
Total liabilities and owner's equity. You do not divide by
By
total
that one.
liabilities.
You do it
So,
up
for instance, 13,300 in accounts payable divided by 90,800.
The easiest way for me to remember is you look at what says 100%, and that's what you divide it by.
Sure, if that works.
Well, yeah.
That's right, yeah.
You know what I'm saying?
And for an income statement, that would be at the top.
Yeah. Okay. So you're gonna have to look at it and measure yourself.
Okay, so you see how we got that? And then 20,600 divided by 90,800. And you'll do the same thing for this year, just 2 different years. So this problem is going to take you, 20, 30 minutes, maybe more, 40.
So we're not gonna be able to probably
It's
do
not
all
that
this
bad.
in
It
one
can be much
night?
worse.
Is that what you're saying?
Huh?
We probably won't be able to do all 8 problems in one night. We'll
Yeah, you
get
could.
flustered.
Actually,
Have a
there's only
headache
7
afterwards.
Words.
There's only 7 problems.
So all of them.
Ready for another
There's
one?
only 7 problems. You threw one of them out.
Is there anything else left there? No.
There's only 7 problems.
Oh, there is.
Yeah.
No.
But you don't need that down there.
No, no, I'm not. Just trying to think something.
Oh, with this?
Every number from the first
Yeah.
one, we divided by 90 and
You can just scroll back up.
No, that's.
Yes.
Yeah.
Rock on. Rock on. Rock on.
Keep going.
Round 13.
Rock on. Okay. All right, now what I want to do, I've changed my mind slightly. I do want to expose you to a little bit to the ratios. I usually give the class 1 financial ratio. We're going to go through 4 of them. They're in one problem, but they're very easy to calculate. All you have to do is know the formula, okay? And the formulas are listed right below. What I want you to get out of this is, why do they do these ratios? Okay, why do we do financial ratios? So I'll scroll down when I need to. All right, here's Motorola's Corporation's annual report. I'm sure it's a lot longer than this. This is somewhat summarized, to say the least. But this is in millions, so we have to remember, we would have to add how many zeros onto these numbers? 6 zeros. Okay? If I added 6 zeros, that would be 315 million.
So we have,
It's in millions.
Oh.
No, just hold that thought. You don't have to do
Okay.
anything.
okay,
It's just an observation.
let's just write down, you stop.
Okay, the first ratio is total debt to total assets. Now look how it reads left to right. Total debt to total assets. So how do you think you'd get that answer? You take your total debt and divide it by your total assets. Now they call debt what here? Liabilities, same thing. So you go to your list, total liabilities, there it is, right? And then total assets right here. Just plug them in. Now who can tell me, what does this mean, 88.32%? It's like a ratio. I mean, it is a ratio, but what is this telling us? It's useless if we don't use it for anything. Nobody?
Comparison between your liabilities and this.
It is, right, exactly. So take it one step further. Think about the concept of $1. Did I say this in here last week? For every dollar in, take a look, which number is higher?
So assets.
Okay, and then you want assets to be higher, right?
Yes.
Okay.
Otherwise you're losing.
Usually you want a 2-to-1 ratio. The value of your assets should be double that of your liabilities, usually. That's a good ratio, okay? But what this is saying is total liabilities account for 88.32% of the value of total assets. That's one way to look at it. But the best way you can look at this is look at this number and this number, and you should have double assets compared to liabilities. If not, then you need to do some strategizing. If you have the reverse, if you have double liabilities compared to assets, That means your debt is twice that the amount of your property, which means you're not in a good situation either. Okay, so this ratio tells us something. Look at the next one, B. Find the return on equity. Return on equity. We don't have to go too deep here, but take a look at the formula. Net income divided by owner's equity or stockholder's equity. Where do you get this from? Net income. How do we get net income? 157.
It's net earnings.
Oh, they call it earnings here. Okay. Well, make sure you notice this. They call it net earnings up here, not net income. It's the same thing though. So for here, you'll plug in net earnings or net income divided by stockholders' equity of 477, and you get 32.91%. And again, what this means, for instance, is our net income represents roughly 33% of our owner's equity.
Which is not good either.
Why not?
32%, your income should be as much.
Yeah, I'm not going to get too deep into that, but it depends on the kind of business sometimes. Obviously, this is a corporation
Well, yeah, millions.
because they have stockholders.
Stockholders would be very happy.
Okay, now the next one. I may have to go back and forth with the screen on the mouse. The next one is the asset turnover. Basically, what this is asking is how quickly are we turning over our assets? Usually, I'm not sure if that's the same as the inventory turnover. That's the one that's normally up there. I think that's what they mean though, same thing. Should be. Okay. So we go to the top. We go to the top and we get net sales and total assets. Let's see if those numbers are obvious for us. Net sales divided by total assets.
Yep.
There's net sales, there's total assets. Okay? So going back down to it. What is this telling us? Our net sales, which you know what net sales are, represent, is this 15%? Or did they just,
No percent.
there's no percent sign on the end. What happened here? Is that less than 1%? I'm not sure what they're trying to show. Somebody punch that in. 300 of 2,000.
0.148.
148.
Okay.
So, 0.15.
So it is 15%. Okay, just making sure.
Round it up.
So net sales represent 15% of total assets, of the value of our total assets. Net sales for what? For that year, for that quarter, for that month? I don't think they told us, did they? Did it say up there? I don't remember. Because that would matter. So notice all these, what do they have in common? They are ratios. We could set them up as ratios on the board, you know, with a colon. Isn't a ratio kind of a division problem? Okay. The last one? No. Net income divided by net sales. The last one. Net income divided by net sales. That one might be more useful for us. I think these two are the best, or just overall, A and B. What this is saying is net income is roughly almost 50% of net sales. Now, that should make more sense to us. Think about it. Net income, which is your profit, represents about 50% of the value of your net sales. Does that make you think? Or are you just listening to me?
Because if you're a business,
I like to feel like I'm doing my job when I walk out of the room. So if you're not listening, that's okay. Just for my own conscience. Huh?
No, it makes sense, because if you had to present yourself to a board to explain this is what you want to do.
Do you think that's a favorable percentage there? Considering what we're looking at here. Think about what we're saying. Wouldn't that be favorable? 50%? Your profit, you're profiting 50%
Yeah.
of the value of your net sales.
Yeah.
Sounds pretty good to me.
We're gonna have to go back and look at the last quarter for
That's
graphs.
extremely good as well. You know, it's,
Are you with the graphs or what?
I had to do this before.
what are you talking to him or?
Yeah.
All right, trend analysis, last two problems, trend analysis. Do you recognize this?
Yes.
Look over here first. Here's the explanation down at the bottom. This is what you're going to see on your problem. What do you remember? The earliest year is always the one you divide by. Yes. Very simple. So let's read through this. Assume figures were presented for the past 5 years on merchandise sold at Chicago department and discount stores. And they list the numbers here for us. Sales in 2009 were $3,214. Now, what I'm showing you here is, do you have to plug these in anywhere?
No.
No, they're right here for you.
You just take the early 2009 number divided by 2005,
Yes,
2008 by
I was going to
2000.
start here, but
Oh,
same
sorry.
thing. Well, yeah, I'll start right here. So 2006 divided by 2005, 2007 divided by 2005, 2008 divided by 2005. Very simple. So you have to do nothing with these numbers. They're set up here for you. Okay? And as we can see, we're comparing what? We're looking at sales over the years. Well, basically sales, right? And in 2006, let's see, 95, 98. Are we doing better here? Yeah. 104, and then what happened here?
Recession.
And then we're still going. If we kept going, it'd probably be 2010 lower, 2000. Recession. Ready for the last one? Okay, it's one like this one.
Do we have to do the
Trend analysis. Okay, here's what you're given. This is not part of the explanation. This is what you have to fill out. Okay, you look at the blanks. Now, 2010 is always going to be, well, in this case, it'll be your base year. It is the earliest year. So to get the answer for 2011 in sales, here is sales 2011 divided by 536. And you get 82% or 0.82 something.
And then you just do the next one. Then you've done it.
Okay. Notice it says round the nearest whole percent. What does that mean, the nearest whole number? So you should have no decimal part of your answer. Okay, a couple more. 425,000 divided by what? 536. Now that's the sales for 2012. The answer would go here, right? Now for gross profit, the next row. And for net income, we do the same format, the same thing. Over and over. And what does it show us down here at the bottom? Sales from 2011 to 2000, we're not even in 13 yet. Maybe that's a projection, I don't know. But
That's not a very good projection.
Save one.
that's, yeah, it's probably safe. So 82, it grew what, 82%? Or it's 82% of 2010. 2012 was 79% of 2010. So honestly, if you look at these numbers, unless you get one like this, you know, this one's over 100, what does that mean? That means you have improved. If you get a number, an answer in this trend analysis, just like the last problem also, it applies there too. Any number here less than 100 means that you did not as good, usually. It depends on what we're looking at. Now, if we're talking about liabilities, yes, we want it to go lower, usually. But if we're talking about sales, profits, asset values, we want them to go up. So let me say one more time, if it didn't hit home yet. In 2011, we made 82% of what we made in 2010. So we didn't even make the same amount of sales. We made less. So this number might be deceiving. You might think, well, that's a favorable answer. No, it's not. Only the ones that are over 100. These two, and that's it. Because these two were what? If you look at these two, they were higher than the base year. There are only two, right, in that situation. So, any questions on this one? Okay, so what's the next chapter? Make sure we understand where we are when we come back in. Because the schedule I'm looking at, I'm not sure what you guys are looking at, but
I got 19.
yeah, I always, well, on my schedule, it says 19.
Yeah, then you put each
It says 16, then 19, I believe.
And then we do 9.
And then 9, correct.
accident.
So for next week, it'll be 19, right?
Sales,
Yes, sir.
exercise.
Sales, excise, and property taxes. Next time, yes, Wednesday.